Hello everyone, good morning, good afternoon and good evening to everyone. First of all, thank you very much for showering your love and affection on the previous video, and I really love the comments and all the likes and the views. So yeah, here's my next video today. So in this video I would again like to talk about how's the situation in Indian stock markets as well as in the US stock markets. Now let's begin with the Indian stock markets first. In the Indian, stock markets, we've been watching for the last almost 2 months that I think it started somewhere near October, that the markets have just, it just kept on falling and falling, and I think it's still falling. I think the last close was around 200 DMA, which is daily moving average. It was roughly about 23,500 on the Nifty 50. Now, you must be wondering what are the reasons, but I think the top two reasons are definitely, first of all, it's the FIIs are selling from Indian stock markets, and the reason is because Trump has won. Donald J. Trump has actually won the U.S. elections, and so lots of money is actually going outside into U.S. Stock markets, and that's causing some pain to Indian investors. And the other problem is lately, lot of companies from Nifty 50 and the big companies as well as from the mid caps, they just didn't give really good results. So what's that doing is it's actually putting more pressure on Nifty 50 and overall market generally. So mid caps and small caps actually fell a lot over the last almost 1.5 months. And let's begin now discussion about some stocks from the Indian stock markets. I would first like to start from Asian Paints, because I think this is a major stock, and we do know that lots and lots of Indians own this stock. But again, I've never been bullish on this stock for simple reasons that in the last 2-3 years, the competition has increased. It's raw material, which is oil, that has always remained subdued in terms of prices, but that has not aided because there's some problem with the demand from the volumes from the rural segment as well as from the urban segment. So what that causing is it's putting more pressure on the stock price. So right now it's roughly about 2,500, which means that in the last 3 years it hasn't really moved at all, and right now it stands at a negative growth in its quarter-on-quarter profits. It's roughly about 700 crores as opposed to 1,232 crores in the previous year's September quarter. So it's a strange time for the company, and even after this fall, the company is still available at 50.7 stock PE, or price to earnings ratio. So that's too high. Again, that was the reason. It was, there's a lot of competition in this segment now with MRF and other key players venturing into this space. So there's already lots of competition. So yeah, that it remains in a white for me. Asian Paints, even if it falls, it's not a growing company. It's available at high valuations. There's no point why you would like to own it. Now, again, in the previous video we discussed about HUL and Bata and how these companies are still richly being traded and available at lower prices. These lower prices will entice you to buy them, but again, these are big companies. They're not growing. They're facing the demand slowed down or higher competition in their segments, and again, they're richly priced. So these remains a void for me. Now, moving to the companies where I really like the latest results. Again, as you know that I'm a big fan of companies that are available at good valuations on TTM or trailing 12-month basis. They have given good quarterly results, and they have a good outlook, and they have very good return on capital on their books. So the first company that comes to my mind is Garware Hitech. Now the this Garware Hitech Films, yes, GRWR HITECH. Now if you see the latest results, look at the price. Markets have corrected by almost 10% if you talk about Nifty 50. And this guy is available, it's just going up. And if you look at their latest results, it was fantastic. You look at the quarter-on-quarter, year-on-year growth, it was about 56% and 127% jump in net profits. Now, a company like this is available still at a valuation of 32.4, which is not that high. I mean, the price would look higher, but believe me, this guy needs, I mean, this guy has to go up. So it remains, a buy, as well as, I mean, this is not a stock recommendation, but this is just like, the picks that I like as of now. I mean, I always believe that markets are dynamic. If by next quarter this company doesn't perform or it remains quite richly priced, one should exit. The next company today I really like this company. I think this is Natco Pharma. Again, you will see the company has come down from 1600 to about just below 1400, but the recent results were amazing. The stock has been doing pretty good. I think in the last 1 year, it has just come up from 782 up to a high of about 1500, so almost doubling there. The PE looks low. The growth rate looks great. 32 and 83 were the recent ones, and even if you see on a quarter-on-quarter and year-on-year basis, it was quite amazing performance. Now, Natco Pharma, gets lots of its revenue from the US, and I think the new government would want to have lots of generics which are not richly priced, and the governments would want it. So I think it's right now in a very sweet spot, and if there's a good positive momentum in the growth trajectory, then I mean this guy can go up. The third company, which I mean the latest results were quite amazing. It's called Pix Transmission. And again, it's just a 3,000 crore market cap company. The stock P is just 25. I mean, look at the stock price. So companies like this, which are available, the stock really tells you that, look, I just want to go up. I don't care where the market is going, that it's going down or sideways. I just want to go up. So it's forming that, again, like snake-like pattern, which I really like. And the reasons are very simple. I mean, look at their quarter-on-quarter and year-on-year growth. I mean, Pix Transmission is like about 28% in sales and 95% profit growth. Even year-on-year, quarter-on-quarter was about 50% for them. So companies like this really come out, in your screeners, especially the quarter ones. So I mean, it's a leading manufacturer of belts and related mechanical power transmission products in India, but when it comes to investing, you shouldn't really focus on what that company is making. I mean, that everyone has been making everything in India, like it's Bata or HUL or Godrej, but it's not about knowing which company makes what. It's always about owning which stocks to own, when to own, what's the entry point, and how is the outlook, how are the recent valuations. So it's quite a mix of lots of different factors. Now, we'll move now from Indian stock markets, because we have discussed 3 stocks, to US stock markets. So let's go to the US stock markets now. Well, in the US stock markets, so as you know that lots of because of the win of Donald J. Trump, so lots of money is going into US stock market. So that's why it's trading quite high. I mean, the last day wasn't really good, but I mean, just a matter of time when it might just shoot up. I mean, Bitcoin has been going up, so everyone is just bullish. But anyways, let's talk about good companies where I feel that they could give a good run in a short amount of time. Now, one of the companies that I really like in this space is all of you, it's Google. Now, Google, the parent company's name is Alphabet. Now, let's talk about its current PE. That's about 23. The sales looks good. It's 15% quarter on quarter and 36% profits. And the forward P is 19. So which means that others are bullish. Most of them, and if you see return on investment, return on assets and equity, all of them are north of 25%. Oh, we have a recent upgrade from Seaport Research Partners. They're giving a target of 200. The stock is trading at 173, so about 25% for them. But again, it's monopoly, right? And the problem why this stock is not going up right now is because there's a talk that it might, split its business, which I believe it actually will help the investors. But again, ask yourself, would you want a monopoly like Google to trade at a current valuations of 23.07 when it's growing its profits by 36%? I mean, the latest one. We don't know what the next one will come, but I feel that the company deserves more by almost 1 year. The structure looks okay. And let's go to my next pick. So another company, it's quite interesting. I mean, the latest results were too good. It's a company called gambling.com. It's from UK, and if you look at its history, the stock has been in quite big range, but the latest results were really great. Sales were up 36%, profits were up 80%, and the forward P is just 12. And a company like that deserves, the current P is just 15. A company like this should deserve, because it's in a regulated business, but I think gambling in UK is quite famous in developed economies. So yeah, it trades. It actually is. It has a good business in the online gaming space. It doesn't really offer games outrightly, but it does have lots of other allied services like advisory solutions and others to the experts. So now, yeah, the stock gave a recent good bump, about 20% in the latest results. So yeah, it remains a buy, if you would want to consider. Now, the next one is, and the last one today, well, all of you might know this. It's a company which has given crazy run, crazy profits. I don't think anybody would even think about giving these growth rates of north of 100 and 200%. Now, the company that I'm talking about is Nvidia. Well, we know that the Blackwell chip has been delayed, but what do we have? I think so. The stock came down to about 110 levels, I remember, earlier this year, and now it's trading at about 141. This P is about 66. The last profit was about 169. The sales at 122%. Let's see what the next results would be, because I think this company has already risen a lot, but I think, I think the forward P is still 33, so there is good room to grow. And Oppenheimer also has an outperform rating at 175. I believe this stock can give about 20%, 20-25% could be an easy run. The good part is I think it won't really wait for the result. I think before that, this stock might go up again, I'm saying. So yeah, that's about it. I hope that you would like today's video, and these are just my thoughts. These are not stock recommendations at all. Please ask your advisors, financial advisors, before buying or selling them. So yeah, if you like this video, please subscribe to the channel. Please like this video, and feel free to comment about if you have any questions, any feedback on this video. And yes, don't forget to subscribe. Thank you, and we'll meet you in the next video. Thank you, and have a great week. Thank you. Bye.